What are the top 10 mistakes that traders make in their trading that, burns away their profits? Let's have a look at that. My name is Joachim Geri, and this is Clear Trades. Before we get started with the mistakes, why do I even have any say in this? Let me give you a little bit of background, okay? So I was a professional coach before I became a trader, and some of what I will be sharing is coming from this perspective, from having worked with people and seeing some of the psychological hangups that people have. The other thing is that I'm not new to trading. I have been trading for a while. I have been a total beginner, and I have made those mistakes, and not making those mistakes has made me a better trader. I have been profitable in demo. I have had a huge loss on live account, which I have recovered from, and I've started to go towards profitability. I've not blown the account. I am currently up, and if the next few trades are working out, I'll be up quite a significant amount. So this is coming from someone who has been a total beginner and who has lost money, and who is now at the very least at break even, potentially at profit. Why am I mentioning this? Because I don't want to mislead you. I don't want to pretend that I'm some kind of guru who has figured everything out, who has years and decades of experience and is totally profitable and all of that. That is not the case. Yet I still have something to say that I believe is worthwhile, and I believe it's going to be helpful for you, especially if you're starting out, because I can see these patterns play out as I engage with communities on Reddit or Baby Pips or other traders, where I'm like, this is clearly a mistake in how you see trading. And if you were to shift your mindset, you would be more likely to succeed with trading. Is addressing these mistakes a guarantee that you're going to become profitable? No, it is not. But not making the mistakes, it's going to make it more likely that you will be profitable, in my opinion. Now, I do run a Telegram channel. You can check it out, where I call my trades in there. I share my analysis. The link is in the description or in the comments below. And without further ado, let's get started with the 10 mistakes. So the very first one that I see that the very new beginners are making is that they believe trading is going to make them rich very quickly or overnight. This is, of course, coming from social media, looking at YouTube and seeing, hey, look, there's this dude and he's just pressing some buttons, and he just made like 50K or 15K or 100K or whatever. And you're like, oh my God, like that's amazing. So I can get rich overnight. This doesn't look too hard. This is a huge mistake, because it stops you looking at trading as a serious profession, as something that you need to actually sit down and check out and learn and study and hone. Because you're like, I'm just gonna learn a few things, I'm gonna press some buttons and I'm gonna get rich. And unfortunately, some people, they do learn a few things and they do become not necessarily rich, but they have some success. And they're like, yeah, see, I knew it was easy. And then over the next few months, they give everything back. And that is going to be quite devastating for them. So stay away from this mistake by thinking it is a rich, quick scheme. Look at it as a serious skill that can take years to properly develop. Okay, so it can take a significant amount of time. There are some traders who seem to be very fast in becoming profitable, and there's people who are taking years. I've heard of people trading for 10 years and not being profitable. You need to know about that. I need to know that this is a possibility, because it will shift your mindset towards learning to enjoy the process rather than trying to get rich quick. It's just not going to happen. All right, so what is the second one? The second one that I have made for sure is like, well, if I'm going to enter this trade, it's going to go there, I'm going to make so much money. Well, you're looking at only the profit. What you're not looking at is, how much am I risking to make that kind of money? That is what you should be asking yourself. Because when you're just looking at the potential profit, and you're not looking at the downside, you don't know what it means for your account and for yourself if this trade does indeed not work out. And let's say you're taking a trade that has a 50-50 chance of working out. You need to look at the downside, because you will make a better informed decision on how much risk you're actually willing to put up for this trade. Because you're just looking, well, I could make 2K, yes, but you could potentially lose 2K as well, or maybe more. I don't know. Depends on how you look at your risk reward ratio. Or you can like, I could make 2K and I could potentially lose 1K, but you need to look at that and be like, am I comfortable? Okay, you have an issue, because if this trade is going to go against you, how exactly are you going to the risk that you're taking and asking yourself whether you're comfortable with that risk or not? Really important, because otherwise your emotions are going to kick in. You're like, have an emotional problem. You don't necessarily have an emotional problem. You have a problem that you're taking on too much size too quickly, and that you actually can't handle that risk that you're taking on, and that you are just needing to size down. It's very simple. Now, the next thing I see, and I was in that one for sure as well, is like, hey, look, I'm going to learn about patterns, So there's this doji and the gravestone doji and the shooting star, and I don't know what all those patterns are that are out there. These things are, in my opinion, profoundly unhelpful. The reason they're profoundly unhelpful is because they make you look way too small. So you're looking at a few patterns and you're like, hey, look, this is a gravestone doji or whatever it is, and I'm going to enter trade because of that. No, you should not be entering a trade because you saw a pattern. You should be learning and looking at the market in a holistic manner, in a big picture. That is what you actually need to do. Without you learning to recognize the context, the patterns are 100% useless. The patterns may have some usefulness when entering a trade, when the context is right, when you've gotten a feel for the market, when you're like, okay, this really looks to me like it has a good chance of reversing or going in my direction, and I'm going to enter here. And you see, hey, look, I can also see this pattern as a small confirmation. But it's just a small confirmation. It should not be the majority of your analysis. The majority of your analysis should be watching the market, seeing how the market moves, seeing how the market breathes, see how this asset is behaving. That should be part of it. See where support and resistance are. Where has it bounced before? And how does it behave when it bounces? Those are all things, nuances that are so much more important and vital than some stupid candlestick pattern. But it is also infinitely more difficult to teach to people, because there's a lot of nuance that you really can't even verbalize. You only can really get to it when you are watching the markets, when you're looking at still charts and doing some analysis and you're really absorbing yourself in the charts. That's when these things can become visible. They cannot become visible by just looking at a few patterns, there's a few candlestick patterns. You're not going to get that. And so you need to have those kind of nuances within your trading. Without that, you're going to be struggling and you're going to start questioning yourself, because and rightly so, because you're basing your analysis just on a few patterns. It's just not good. It really is not good. You need to look at the bigger context. You need to get a feel for the market. You need to get in sync with what you're trading. And as you get in sync with it, you're like, okay, look, this is pushed this far. I really think it's going to start reversing. Maybe it's at a resistance zone. It starts to behave in a certain way. And you're like, okay, I think the probability of it reversing here is increasing. And so I'm going to take a trade. It still can go against you, by the way. And that's another mistake, but that's maybe, I guess, a bonus mistake that people make. But it's actually a really important one, but I didn't think of it when I prepared the video. So anyways, now, the other thing that people are making a mistake, and I was for sure one of them, is you enter a trade without a plan. I'm just going to press the buy and the sell button. Yeah, maybe profit somewhere here, I get stopped out somewhere there, and this is about it. That's not a proper plan. Yes, as experience grows, you might not be thinking very detailed about what you're going to do, but you should have some kind of idea of what kind of trade you are taking and how are you going to manage it. So for example, it is somewhere at a support zone and you're like, hey, I think this is going to bounce here, so I'm going to start buying. Now, the question is, how are you going to buy? Are you going to start a small position? Are you going to add to this position as you see confirmation? Are you going to add to this position if you see momentum? Or are you taking a different approach? Are you taking a DCA, which is short for dollar cost averaging approach, which is basically a grid approach? You get in here, it starts pushing against you, you are putting in a recovery trade at a reasonable area. It goes further against you, you have another reasonable area that you have pre-identified that you're going to be adding to it. So it's like a grid. Those are called recovery trades. So if that is your plan, you're like, okay, and I have a fourth area, if it gets to here, I'm going to use a multiplier of the first position so that if it does bounce here, I'll be quicker in profit or break even. And I can get out of this trade either at a small profit or break even or a small loss because I have prepared for the contingency that it can go against me. Now, all of these things that I've said, they take different approaches in terms of how you start your trade. If you're going to use a grid approach, you are not going to be able to risk a large amount of your capital on this trade because you're not going to be able to add to the trade because you're going to blow the account. But let's say you're like, well, so I usually trade with a 1-to-1 risk reward ratio. I will cut the trade. If it were to start breaking the range or the support, I'll cut it. I don't wait till it hits the stop loss. And so you're like, actually, I can say size pretty heavy. The profit will be quite significant, but the risk is not that high. The actual risk is not that high because I'll be cutting it much earlier. So you can size much heavier. But if you're looking at a DCA approach where you're scaling in as it pushes against you, what you're going to do, you size too heavy. You need to size way down. And then you're like, well, you also need to look, well, I'm in this trade and there's another trade I want to take. Are you able to handle both trades? Is your account able to handle both trades? If you're using a DCA approach, are you able to, are these assets correlated or not? Meaning that they are moving in the same direction or they're moving somewhat in opposite directions, or maybe they don't have much of a correlation, but you're not planning that. And so you're not planning it, and then you're freaking out because your account starts to go into heavy drawdown and you haven't prepared for it. So you need to have a plan. You need to have a plan, and you need to know what to do when ABC is going to happen. And of course, you're not a fortune teller. You don't know all the various things that can happen for a trade, but you can have a rough idea. I'm going to enter the trade here. What's going to happen if it's going to be stuck in a trading range for the next 100 bars? Am I going to exit the trade, or am I going to just keep holding? This is a swing trade, or is this a scalp? So plan your trade. Without a plan, what you're doing, you're just kind of hoping for dumb luck, and you don't really are able to replicate this because there's no skill behind it. Part of planning and executing is a skill, which is really important. By the way, when you see me looking down, it's because I am actually having some notes here because 10 mistakes is quite a lot to remember. All right, number 5 can be somewhat of a controversial mistake that people think. Some people will agree it is one. Some people will not agree with it. It is one. It is actually nuance and context based. So what is it? It is cutting your winners and letting your losers run. It is only really controversial if you are trading without a plan. The previous mistake, because if you have pre-planned, you're going to be adding to your loser. It is nothing controversial, or is there anything wrong with it? It is a profitable approach to use DCA and to add to your losers, despite what some people think that you should only add to your winners. No, you can add to your losers, but it has to be context-based. It has to be nuanced. It has to be pre-planned. You have to be sizing appropriate, etc., etc., etc. There's a lot of it to it. What happens with most people is that, hey, it's going against me, and they're like sitting there doing this. Hopefully it's gonna, it's just gonna reverse. I'm just hoping for the best. I'm just hoping for the best, right? It is not pre-planned, and they just let it run and just rips through, all the potential supports or resistance. And you're there stuck, and you don't know what to do. You don't know what your total risk was. You haven't put in a stop loss, and you're just letting your loser run. And it's basically taking away all the profit that you have made in the last week or last month or last year. Not a good thing. You want to have you don't want to do that. And so you want to cut your losers. So you want to have a stop loss in mind. At the very least, for most people, it is advisable to have it in the market so that you cut it when you actually and you automatically get kicked out of it when it gets there, and not debating, oh, maybe I should stay in the trade, maybe it's going to bounce, maybe whatever. No, it got to this point for you. You have chosen this area as a stop loss because it would invalidate your trading idea, or you're just simply, if it goes there, I need to re-evaluate. I need to get out of this trade, stay away from it, and look at it again, and then decide what the right move is. So you have to decide that, you stick to that, you let it be hit, or you get out before it ever hits your stop. But you want to cut your losers because they can really eat away at your profit. And the opposite is you want to let your losers run, at least to some degree. Some people, they just want to let it run, like Tom Hooker. He can have humongous wins because he can sit and let it run for a long time, but he can also have a rather big win which disappears into nothing. And so again, that is something that you have to find your own way in terms of what is right for you. I personally like to look at market structure and start taking profit when I think it is appropriate. I don't think I want to let it run, and then because eventually most things will reverse, at least to some degree or to a larger degree, and you will lose your profits. That is my opinion. But you do not want to, okay, I have a little bit of profit, I want to protect and just close the trade. And so what's going to happen, you're going to have your winning trades that are this small, you have your losing trades that are this small, and you're a losing trader because you're just losing more money than you're making. It's very simple. But you need to stick to your take profit. That is a good idea. That's a way of letting your winners run. Another way of what you can do is you can have multiple take profits in your trade. So you have TP1, TP2, and TP3. You can also have you have one TP and then you let it run, and then you close the next half when you feel like you think like this is a reasonable place to close it. But you are actually not letting yourself be change short. And this is something that I sometimes still do. That I am closing a bit too early, and often if that does happen, it is because of sizing, meaning I have sized a bit too heavy for my taste. I start to get scared, and I'm closing the trade because I don't want to lose that kind of money, which is a mistake, and I have started to rectify it. And I believe I'm on the right track with this one to not get much pulled into that. All right, then the other thing that people make, especially in the beginning, is that they're risking too much too soon. So let's say you have been profitable on demo, you're like, okay, great, I got this, I'm going to go in and I'm going to open my account with my entire trading capital. That is risking too much too soon. Why? Because demo account is not the same thing as real account. Yes, I do recommend that people start on a demo account. I did, and you can learn so much in terms of your skill of trading just through the demo account that it is very much worthwhile. But you can't then just say, hey, I'm profitable and I'm going to go and start a real account. I'm going to start with my whole capital. You have sized up way too quickly. What you need to do is you need to start with a small amount of your trading capital. You put that in and you keep honing the skill of trading with live capital. You see how you perform. And then over time, you start sizing up as you see appropriate. And that is as is fitting for you and your specific situation and your specific context. But like I start sizing up, and I sized up a little bit too fast. I got a bit scared. My psychology wasn't as solid when I started sizing up. So I had to size down again a bit to find my footing, and I will be sizing up more again. I didn't go all the way back to my small sizing that I had before with some of those trades. I did stay at a bigger sizing, but it was smaller than what I wanted to do. And that is reasonable because now I'm trading much better and better in flow rather than being too scared. And that's okay. Now I have a higher threshold, and now I can look when the time is right for me to size up a bit again. But it is something that you can do over time as you feel comfortable and as it feels right to you to start pushing to a higher size without freaking yourself out and, basically getting rid of all the good habits that you've built with your trading. So don't risk too much too soon. It's not going to be good. Now, the other thing, which is something I see a lot, and I know myself, especially when I've sized up, it can happen. You keep staring at your P&L. That's profit and loss, meaning you are entering a trade and you start looking at it and you're like, wow, is this much profit? Or wow, is this much drawdown? Oh my God, I got to get out. You are looking at the P&L and you let the P&L decide what kind of decision you should be making. That is 100% wrong. You need to be looking at the chart. The chart dictates what you're going to do. I mean, ultimately you decide, but it is on the basis of the chart. You need to look at the chart, because where is your skill? Your skill is in being able to read the chart, to manage your emotions, and all kinds of other things that is involved with trading. But it is not by looking at the P&L and then making a decision based on your P&L. You're making your decision based on what you see happening in the market and what you think is a appropriate response and appropriate decision. And sometimes the decision is to do nothing. That is a more appropriate response than to do something. And so you should not look at the P&L. If you're staring at your P&L, learn to check the charts first. Always look at the charts first. And when you're looking at the charts, just pretend, you're having $1 in profit or $1 in drawdown. And you are looking at chart like, if I have only this much profit or loss, what would I do? Would I let it keep running? Not because it is little amount, but just because I think that is the right decision. Or would I cut it? Would I add to a trade? What's the decision? What's an appropriate decision for the context, for the momentum in the market, for how the market is behaving and the cycle of the market that you're in? Maybe you're in a trading range, maybe you're in a trend, whatever it is, right? But you're making that, you are not looking at the P&L, you're actually honing your skill as a trader. It's so important to stop looking at the money and the P&L, because it screws you up. You are not trading the chart anymore. You're trading your P&L, and that's just not helpful. Now, the other thing that I see as well is that a lot of people don't have any kind of routine that is linked to trading. In my opinion, when you're starting out, maybe that's different when you've been doing it for 10 years or whatever. It is really important that you have a solid routine that supports your trading. Is it useful to check your email about work that's going to distract you from your trading while you're trading? No, or before you're trading, because your mind is going to start thinking about all the stuff that you're supposed to do or still need to get done, and you're not looking at the chart. No, that is not good. What will bring you into the best mindset for your trading? That should be put into a routine. You should be executing on that routine every single day. I meditate pretty much every single day, unless I need to catch up on sleep because I have some sleep issues that happen here and there. Then sleep is more important. But I have a solid routine that is helping me with my trading. It is not something that can be skipped, because for me, trading is to some degree a high performance sport. And every high performance sport is optimizing their life. So you should be looking at, how can I optimize my sleep? How can I optimize my nutrition? How can I optimize my rest time so that I get the most out of it, so my mind is rested and sharp when I go and I look at the chart. This is especially true if you are day trading. I don't do too much day trading. I sometimes take some trades that I only hold for a day, but I do a lot of swing trading. And in that regard, it is a little bit different. But it's still important that you actually, when you look at the chart, you are in a sound mind, and that you have done the best to actually look at it and make a appropriate decision in that moment. Now, when you're day trading, it is important that you have an appropriate amount of exercise and all of that, because when you're trading, you can experience adrenaline being brought into your system, but you are stationary and you need to actually go and exercise. It is not healthy to have adrenaline in your system without moving, because what does adrenaline do? It actually gets you ready to move, to get away from the tiger, except there's no tiger, it's just a chart looking at you, or you're looking at the chart. And so moving the body is really important, and it has all kinds of benefits. I mean, this is not the video about this, but make sure you actually have a solid routine for yourself, for your trading, and for building the skill of trading. So one thing of having a routine might be to regularly watch whatever video that is going to help you improve your skill. For example, for me, I've learned a lot from Al Brooks. Part of my routine is to watch some of his videos and review them, because I always learn something deeper about how he views the charts that I can incorporate into my trading. That is part of my routine. So you're honing a skill that you want to habituate, but you cannot do that without a proper routine. All right, number 9, short-term wins versus the long-term game. You need to look at it as a long-term game. Get away from making money. Look at it as a skill. I've mentioned this so many times in this video, but it is so important. So you're focusing on making some money right now rather than looking at how much money can I make in 2, 3, 4, 5, 10 years when I've actually mastered a skill and I've become really proficient at it. Because here's the thing with trading, you can just scale up by putting in more money. No other skill really allows you to do that in terms of money. Like often you want to have more money, you often have to put in more hours, or you have to change things. With trading, you got the skill. Unless you're starting to trade hundreds of millions of dollars, you usually can stick to your system. And I don't think I'll ever be trading 100 millions of dollars. But if you start to become humongous and you have billions of dollars to manage and whatever, you probably have to start changing how you do it. But otherwise, you have a skill. The only thing you have to do is put in more capital. That's it. You have a business. Let's say you have a restaurant business. You want to increase your capital that you get. You're going to hit a ceiling with that location. You're going to have to open another location. Yes, there's a bunch of things that you can optimize before, but again, you need to optimize, you need to learn. There's always a learning curve and all of that. And the only learning curve with sizing is you need to get comfortable with having a bit of more sizing. That's it. It's a very different thing than having to suddenly implement, delivery or something like that for your restaurant. So it is really great what trading can do, but you cannot reap that benefit if you're just thinking in terms of weeks or days. I'm going to start my account and I'm going to double my account, in 2 days' time. You're not thinking long term. You're not thinking what you can get out of the markets and create for your life when you're thinking this short term. Now, the last one, which is probably the most important mistake that I see people make in this trading, and this is heavily based on what I've been doing before, is that they are looking at the visible part of trading, which is, okay, how can I analyze the chart? That is very limited. The other thing they do, okay, how can I control risk in terms of stop loss? That's important. I'm not belittling that, but it is a small part of trading. In my opinion, the most important part is to ask yourself, what kind of person do I need to become to be a profitable trader? Do you see and feel how much more that opens you up in terms of what needs to change in order for you to become profitable? Are you going to be profitable if you're just impulsive? No, you're not. Are you going to be profitable if you're undisciplined? No, you're not. So you need to become disciplined and controlled. Learn to control your emotions, learn to stick to routines, learn to be disciplined. Am I going to be a profitable trader by being closed-minded? No. You need to be open-minded. Yet at the same time, you need more perseverance to stick with something. So there's all those nuances that can come to surface when you just ask yourself that question. What kind of person do I need to become to be a profitable trader? Will that question guarantee you will be a profitable trader? No, it will not. But it will make it much more likely because now your view on trading is so much broader. It is not just based, okay, how can I look at the chart? How can I place my stop loss? Where can I put my profit target? These are all important questions, but they are not the answer for most people because they have other issues. They become emotional. They start revenge trading. They don't do their journal. They don't review their trades. They don't do all of this kind of stuff that will actually help them and teach them to manage trades appropriately. Like, I make mistakes. Go to my Telegram channel. You can see I make mistakes. I sometimes close too early a trade, or it starts to look like, wow, there's a good amount of bullish momentum. I'm going to close just for it to reverse and go into the direction. I have to go back. Was the decision justified? Was it fear-based? But through the reviews, I start to become more confident because I'm like, oh my God, okay, if I just held it a little bit longer, I would have made a lot more money. So now I'm going to just hold a bit longer and calculate in, I'm going to have this much profit, and then this thing is probably going to retrace, and I'm going to see my profit disappearing because I'm looking at my P&L at the moment. We do check the P&L from time to time. That's normal. But it shouldn't be the thing that decides my trading. So I can see it's going to retrace, and probably it's going to have a second leg down. If it will or if it will not, I don't know. We'll see. So you can see how I'm messing up and how I'm, wiggling my way into this trading and making it my own and learning from my mistakes and trying to become better every day. And that's what you need to become a profitable trader, in my opinion. So anyways, I hope you enjoyed this video. It's a rather long video, but I hope I've been able to show you some unique perspectives on trading that I won't see talked about as much as it should be, in my opinion. As I said, you can check out my Telegram channel. You can hit the subscribe button and the like button, whatever, to help the channel grow. If you have any comments, leave them below, and I will see you on the next one. All right, take care. Bye-bye.